Hey, what's up guys? It's Mark from Trading Today, and in today's video I'm going to talk about the S&P 500, go over a quick update and to see if the S&P 500 is bottoming or is there further selling to go. So I will go over the sectors, sector strength, the fangs, and then we're going to kind of see what the price action is telling us. All right, so let's get started. Okay, so this is the 1 year chart of the S&P 500. This is something I do like to do. And as you guys know, the stock market or S&P 500 has been trending very nicely in the majority of last year. And this year, of course, February we got a sell-off. In March, we got another sell-off. So it's definitely been consolidating around this area. Now, I did mention last week that it looked like it was a bear flag forming, and it kind of did break down. So this bear flag did break down. But I did notice something very interesting. I noticed that there were some buyers coming in right here that bought this kind of sell-off right here at 254. And today there was more buyers that bought it around this 254, 260 area. If you guys can see this now. The only thing I want to mention that these buys were low volume. So because they're low volume, that means that they can be considered more like consolidation or short sellers covering some of their shorts. So there still might be more sell-off just because of that. Again, this is low volume. This is see this buy-in. These buy-ins are low volume. Nothing compared to this huge green volume over here. Which let me do this so you guys can see a little bit better. If you guys can see that with a hammer candle, that's a huge buy-in volume. If you compare this volume bar with any of these, it's very low buy-in volume. So that's the thing that I'm concerned. Now, I did like that there was some accumulation here on yesterday and today, but again, the volume is not there to push it to kind of reverse its course. So we're going to see how this consolidation plays out. Now, we did see a sell-off breakdown of this low right here. But again, this 252.92 hasn't broken down. So that's good. That's still holding. So that's very important. This thing has to hold. This level, 252.92, has to hold for the market to the reverse. So now let's look at the 200-day moving average. Again, it's a very important moving average that investors and long-term traders and things like that, they're the ones that look at those levels. They kind of help them, guide them to make trading decisions. So you guys can see the 200-day moving average did break below, but today it closed above the 200-day moving average. So that's kind of good in a way. You guys can see the 200-day moving average is right here. Literally is touching around 258, and today the stock market closed at 260. S&P 500 closed at 260. So that's kind of good. But again, we're going to see. We're going to see that holds. It looks like there's going to be more consolidation. And we're going to see if this thing either goes up or goes down. So again, there has been a lot of sell-off. So right now, I feel like sellers are exhausted. But if there's some consolidation, there could be more sell-off. That's the only thing I do see. But again, sellers have definitely been exhausted. If you guys could see this huge move from 280 all the way down to 250s, 254, that's a huge move right there. So similar to this huge move that came, then we saw a bounce. So right now we haven't seen any big bounces. All we are seeing is consolidation, which again could cause more a sell-off. Again, because this kind of looks like a bear flag right here. So that's something I want to mention that's very important. Now, the next thing I want to do is cover the sectors in the S&P 500. So today the biggest mover was energy, but again, energy is not doing absolutely nothing. So it's not really a sector that that we really pay attention right now, because if you look at the last 2 months, it hasn't literally done anything. Healthcare, we saw, this is what I don't like about healthcare. It made lower lows. It broke below this level. so it's making lower lows. So that's definitely negative right there, and because healthcare was actually a sector that was trending, so that is definitely negative right there. Let's see some of the other sectors. So we got the materials, again, made lower lows, and it continues to downtrend, so that's negative again. So we got healthcare, materials negative. Let's see industrials. Industrial hasn't broken down below this level, 71.48 level, so that's good. So I'm happy about that. So that's good. Now let's look at financials. So financials broke below this lower level, so that's not good. So that's not good at all. So we got healthcare, materials, and financials. What used to were trending kind of broke and made lower lows. So that's not good. Now staples hasn't really done anything, so I'm not really paying attention to that sector. Now consumer discretionary, that looks good. Hasn't broken below this level, which is the 97 level, so that's good. So consumer discretionary and industrials are looking decent. Now let's look at technology. Technology, again, hasn't broke this level, 61 level, so that's good. That's very, very, very good. Let's look at biotech. It actually hasn't broken either, so that's good. That's good news for biotech. And we got it REITs, which real estate investment trust. We're not paying attention to that because it's not really trending. XLU didn't use the trend, so we're not paying attention to that. And I did want to kind of show you guys the VIX, because it's very, very important to understand the VIX, because when the VIX goes up, the general stock market goes down, as we saw here in February, saw here in early March, and we saw here in late March. So what I do like is that in terms of the VIX is that it's slowly going down, and we do occasionally have spikes here. You guys see that? But it looks like it slowly is trending down. And we hope to see that, because if this thing starts accelerating in a downside, we could see a bounce in the stock market. Now, if it does the opposite, if it starts accelerating in the upside, we could see bigger sell-offs. If it starts doing something like this, going parabolic, we definitely could see bigger sell-offs in the S&P 500. So, as you guys can see, guys, sectors that used to be trending, that are no longer trending, making lower lows, are healthcare, materials, and financials. And financials, actually, financials and technology are the two biggest sectors in the S&P 500. I believe they make up around 40% of the S&P 500. So the good news is technology is trending still. It's still holding, and it hasn't gone below this low right here. So that's good news. But financials, which is, again, the second biggest sector in the stock market, actually made newer lows. So that's not good. So again, keeping all that in mind, overall the market does look more bearish than bullish at this moment. The only thing that I could see saving the stock market to continue to start trending is earnings. Earnings do start around mid-April, and usually the rule of thumb is when Alcoa reports their earnings, that's when earnings season start. Now, Alcoa will be reporting earnings on April 18. So from there, all the other companies are start reporting earnings. So if we have a really good earnings season in the second quarter, we could see a comeback in the stock market. But again, we're going to have to wait until that. At the moment right now, all we see is consolidation, and we don't really see anything good right now. It literally looks like it's downtrending, so that's not good. And it almost looks like it's range bound, but it's because it feels like it's been oversold, and there's not enough buyers to prop it up, and sellers are exhausted. So it's literally just moving back and forth. It's not really doing much. So we're gonna literally have to wait until earnings season, April 18, to kind of really see what's gonna happen next. So hopefully that makes sense to you guys. I wanted to kind of quickly go over the FANGs, which are the leading stocks in the tech sector, and actually leading stocks in the overall market. So that includes Facebook. Again, Facebook had a decent bounce, but nothing much. I mean, there's some accumulation. And, you know, if you see this hammer candle, but it kind of looks like it's range bound. It's really not doing much. Let's see what else we have. We have Amazon. Amazon, I feel bad for Amazon because it has been attacked by Donald Trump, President Donald Trump, because he's saying that, again, they're not paying taxes, that they're destroying a lot of small retails around the country, and that they're taking advantage of the U.S. Postal Service, and which, you know, the Postal Service has said that actually Amazon is helping them grow their business. So, again, we don't really know. I mean, but definitely those comments, those tweets that President Donald Trump sent didn't really help Amazon. Now we have Apple. Apple is it is holding that 165 area, so that's nice. It did kind of have a hammer candle today, so we're gonna see where this goes. So that's good. Now let's see Netflix. Netflix is, you know, testing this 287.12 area, and actually Netflix has their earnings on April 16th. So we'll see what happens with that. You know, we'll see what happens with that. Let's see who's next. We got Google. Google is actually at the lows. It's consolidating. It's holding these levels. It actually already broke below this level, but it held. And we're going to see it was able to bounce off and start trending up. We're going to have to wait for that. So that's pretty much it, guys. I hope this made sense. Again, we are pretty much, you're going to have to wait until April 18 or the start of earnings season, second quarter earnings season, to really see where the market goes. Because right now, all we see is like a range-bound type of market where it is not really doing anything. Again, sellers are exhausted, and really there's no new buyers because new buyers are kind of worried of what's going to happen, or, you know, so that's what I am a little concerned about. But again, we're going to have to wait until earnings season to see where the market goes, and we're going to have to take it from there. So, hey, guys, hopefully you guys learned from this video. Feel free to subscribe to my Facebook group, Investing and Trading for Entrepreneurs. Again, feel free to follow me on Instagram, and you guys will hear from me soon. Have a good one, guys.